G'day everyone, Greg Canavan here. In today's conversation with Ryan Dintz, we're going to discuss in further detail one of the key recommendations we've made for our new money investor product this year. I hope you enjoy it. So that brings us to the final recommendation we made for this year. And I thought that was a really interesting report on Ethereum and staking. So do you want to just take us through that final one, mate?
Yeah, so Ethereum is obviously the second biggest cryptocurrency after Bitcoin. Yep. The key difference between Bitcoin is that Ethereum was built from the start to enable what they call smart contracts, which is basically more complicated actions on a blockchain. So I talk about this in the report, but Bitcoin was intentionally not very complicated because its primary use case was peer-to-peer transfers of digital cash and having a secure, stable store of value. Whereas Ethereum thought you could use blockchain technology to decentralize applications. And that has obviously been a great success for them. They're the second biggest cryptocurrency. 2021 has been a weird year for Ethereum, though, because you have seen a rise of competitors to Ethereum. You've had projects like Binance Chain or Solana or Cardano, other smart contract competitors that have said, hey, we can do things better than Ethereum. Because the trade-off a smart contract platform has always got to do is, do you sacrifice some decentralization for the sake of efficiency? And if so, how much of that do you do? Do you sacrifice some of that for the sake of speed? And there's all these trade-offs they can make, and trying to work out what the perfect mix of that is hard. So Ethereum settled on one version. Some other competitors came along and came up with other, matrices for that. And I've got traction. Maybe they were cheaper or faster or more usable than Ethereum. But behind the scenes, Ethereum has got a huge war chest of researchers and developers. And there's a couple of what they call scaling solutions that are due to come out in, early 2022, which promise to solve some of the scaling issues. So make it cheap, make it fast. And if that happens, you could see Ethereum, slingshot back into dominance, and you could see some of these, competitors fall away. And that's has been how things have worked out in the past.
But when you say bring it back into dominance, I mean, it's not as if it's underperformed in any way this year, though, right? Like it's the actual price has done reasonably well.
It's done reasonably well, but
even in crypto terms,
compared to the smart contract competitors. So compared to its peers, basically, of its peers, it's not done as well. It's done all right compared to Bitcoin, but again, I sort of separate the markets that they operate in to a certain degree. But it's done, it has done fine. It's had a good year, don't get me wrong. It's just, I suppose, at the community level, I've seen a lot more disgruntlement amongst users complaining about high fees. Some new people come to it and say, hang on, it's cost me $300 to do a transaction. It's not exactly the best introduction to.
So what's your view of these scaling solutions? Do you think they might have some issues, or do you think that should solve the problems?
Look, they're technically complicated and they're beyond my ability to decipher, the technicalities of it. But according to the people that I follow that are investigating it, there are, some really smart solutions coming. And according to the Ethereum proponents, then it's going to blow everyone away. And if that's true, right, it comes back to the economics of Ethereum, which is you've got this asset as an investor where you can stake it and generate income. And the way the token economics work, as we said in the report, is that the more users on the Ethereum network, there's actually a burn function which burns Ethereum, so basically gets rid of it. And so if these scaling solutions do work, as the proponents say they will, and all that innovation just starts to ramp up on Ethereum and it becomes the dominant platform, and in 2 or 3 years we live in a world of decentralized apps all running on Ethereum, then someone who buys Ethereum now and stakes it could see the value of the income they're generating in newly minted Ethereum just rise year after year after year. And I tried to give an analogy at the start of that report. We said, it's like, being an oil family from the turn of the century in the late 1800s, where the kids are living off dividend checks from that time, which have just gone up and up and up with the century of oil taking hold. That could be the case for Ethereum, but I don't want to sound negative on it, but I always feel a lot more secure with the future of Bitcoin because it doesn't change as much. Whereas with Ethereum, there's a lot more changing about it. Its consensus mechanism is moving. It's getting these scaling solutions, and with change comes risk as well. So I still really like Ethereum, and I do think it's by far the most likely smart contract platform to succeed. But there's a chance that another platform comes in and does better, more so than Bitcoin as digital money.
Yeah.
I think Bitcoin as digital money can't be overtaken, whereas Ethereum's future isn't as certain as that.
You just mentioned consensus mechanism, and I think it's a good time just to remind viewers that the consensus mechanism for Bitcoin is a proof of work system, whereas what we're talking about with Ethereum and is moving towards proof of stake, which is where the strategy of staking your Bitcoin, staking your Ethereum, actually putting it into the network for use, and you earn a fee or an income stream on that, right? That's the whole idea behind staking.
Yeah. So they're both ways of securing a decentralized network. So remember, when you've got a decentralized network, you need to know what the true state of that network is at any one time when you make a transaction. Yeah. And so you need what's called a consensus mechanism. Without getting into technicalities, Bitcoin uses proof of work, which rewards Bitcoin miners who generate huge amounts of computing power to try and secure the network in a certain way. Yep. Whereas Ethereum secures the network by having people who own tokens, Ethereum tokens, having them lock up their tokens in a certain contract, which checks the system for consensus. And if you don't do the right thing, you can have your tokens slashed, you can have them cut. So there are two different ways of doing the same thing. There are pros and cons to each approach. Some people argue, for example, that proof of stake rewards people who hold more tokens. They're therefore sort of entrenching a system where the richer that you are, the more sway you've got within that mechanism. Whereas some people would argue that Bitcoin mining is bad for the environment and similarly rewards people with money that can afford to invest in these huge data centers. So there's pros and cons to both. For my money, I think the infiltration of Bitcoin mining, that proof of work system, into the energy industry certainly adds another layer of interest over proof of stake. But as an investor, proof of stake, locking your tokens and just getting an interest is pretty cool. And you can't do that with Bitcoin. You're relying with Bitcoin on the capital appreciation. You're not generating income. Whereas with ETH, you can generate crypto dividend streams for a long time.
And there's not necessarily a minimum, is there? There's just a certain amount, because you've got to pay fees to get it into the system. So there's a certain amount that you'd want to sort of look at as a minimum, so you're not getting too much eaten away in the fee structure, right?
Look, I think in the report I gave two ways of doing it. If you're only going to use a small amount of money, or you're not that experienced in crypto or not that confident, then you can try and open an account with Binance, which is an exchange. And they have a way of just doing it through their system, which doesn't cost as much. You can do it with smaller amounts, I think. You are trusting them to hold your Ethereum, but if you're only doing it, with less than a few $1,000s, maybe that's a trade-off you're happy to make. It's probably an easier process. I have had some people writing and say they were having problems opening a Binance account because of ID. You could try other exchanges. I think there's a few other exchanges which might do the same thing, or just try the Binance help desk and hopefully they can resolve it for you. If you do want to maintain true to the crypto ethos of owning your own tokens and doing it in a decentralized way, the other option I gave in the report was to use Lido Finance. But like you say, the things you have to be aware of there are that when you go to stake your Ethereum, depending on how high the Ethereum gas fees are at the time, if they're high, it could cost you $400 to stake it. I did do some interactions yesterday because I just wanted to see where the gas fees were, and it was less. It was down to about $70 for me to do a transaction on Ethereum. So you can go on and see if you want to do it, and if it's too high, you can just reject the transaction. I did refer in the report to some instructions on how to use Lido Finance, which usually involves using a browser wallet called MetaMask. And if you are an enthusiast and you want to know these things, I would encourage you to start, downloading MetaMask and trying to do this yourself. Because if you can use MetaMask, then you can tap into this ecosystem right now without anyone being able to stop you. But just be aware of those gas fees, because they can, if you've only got $1,000 and it's going to cost you $300 to do the transaction, then it might be better just to do it through Binance for the time being until you build up a bigger stake. And if you're not technologically savvy, then using the exchange to do it for you is probably the the safer option.
Thanks very much for listening. I hope you enjoyed that little snippet of New Money Investor. If you'd like to become a subscriber, please click on the link below. Thanks a lot.